So, good morning to all. So, today I'm going to discuss this topic with you. The topic is the credit rating process. The previous sessions we are understood, we know about the credit rating, the word's importance, who can say the limit of the credit worthiness, who can assess the credit rating for the companies, investors, firms, governments, those who are invest their money on bonds and shares, others who are invest to buying loans from banks, public banks. So based on the credit rating agency, the giving the scores to the concerned persons. Based on that, the bank, the association, the government sector is going to making them to providing loans for the rates based on the rates. So let us all get into the video to discuss the credit rating process. The next first thing is steps. What are the steps we made to discuss? The first is request for rating initiation. Okay, as a consumer, as a customer, as a loan borrower, first thing is you are going to requesting their banks to rating initiation for any rating initiations. Then next is the collection of informations. Okay, the bank, the credit rating agencies, making them aware of the collection of information about the bank for background verifications about the consumer. Okay, third one is the management and analyst meeting. Okay, then fourth one is data analysis and financial evaluations, assessment of the qualitative factors, the rating committee, the review, assigning the credit rating, disclosing the rating to the client, then the publication of the rating and ongoing surveillance and review. So these are the things which is commonly used to follow by the credit rating agency for analysis the documents, verifying the background of the consumer or a client, so whoever might be. The rating committee is going to be review the document fully, then assigning the credit rating, which is a triple A or double B or CCC. This like the likewise they're going to be giving the ratings for the document, disclosing the rating to the client. Discuss with this much you have already. If the customer have already use any kind of loans in their own account, means the credit ratings, the scores will be low. And the publications of ratings, the ongoing surveillance and review, they're giving such the based on that, the banks or the firms giving the amount to the borrower. So these are basic common things which would follow, which would keep the steps to follow the credit rating process. Next one is overview of data collections and analysis, how it will be evaluated. The first thing is purpose of data collection. Second one is the methods of data collections. Then types of data, data processing and cleaning, data analysis techniques, and quantitative versus qualitative analysis tools for data analysis. Next is data interpretations, and then evaluation of data quality, presenting the finding and reporting, using data for decisions making, then challenges in data collections and analysis. So the purpose, what you made, so what you made the perfect, the method of the way doing the credit rating process, then what are the types of data we will collect, the processing how, the analysis techniques what we made to analysis, qualitative or quantitative analysis, which is going to made by what are the tools we have followed, and then interpretations which is important, the data quality which is very important, then the findings reporting to the concerned person and getting suggestions or corrections, or it's going to be disclosed with the clients, using data for decision making which is crucial part of organization, every organizations. The challenges in data collections and analysis, you know definitely we face some kind of challenges while making this process. Okay. So next thing is industry specific approaches. The first in the what are the sectors using the credit rating? Banking and financial, corporate sector, government bonds, and public sector, real estate and construction industries, insurance industries, retail and consumer goods, energy, utility sectors, telecommunications, and then infrastructure, transportation. Finally, technology and startups newly added on it. So these kind of sectors can easily approach the credit rating agency to getting suggestion. So the further process will be made by the credit rating agencies. Next is the bank loan crediting process. So now newly is like applications and document submissions, data collections, analysis, the credit evaluations, crediting assessments, the rating assignments and a scale, the feedback and communication of results, the periodic reassessment and monitoring, the impact of rating and learn terms and condition example of bank loan rating process. Because when you are applying the loan to the bank, so the applications which is correctly and accuracy data given to the bank, collection is going to collect by the banker to verifying the backgrounds. The credit evaluations should be happen. Credit assessments and based on skill they disclose with you. The feedback and communication which is very important because if you have any defaults histories in your account means they're going to be affects on your current loans documentations. The rating loan terms and conditions should follow. The next in the application, the basic business information is in that financial statements, taxes, a loan purpose, collateral informations, management and ownership details. The credit history is also important. Data collections are going to be analyze the financial documents, review it, then assess the cash flow, evaluation of the debt levels, going to be making analyze profit ratios with then government's reviews and the industry's marketing analysis, the consideration of economic and the factors, then finally risk assessment and predict analytics. So thank you so much for listening to this video. I hope you understand about the credit rating process and what are the sectors made use to follow these steps.